Brilliant, thank you. I think it's worthwhile us getting going. I understand it's a long day. I know that I would hope out of this meeting there is then a positive motion to take forward to the council, which I understand is meeting at 4 o'clock this afternoon. So our duty this morning is very much to fulfil the penultimate step in our annual accountability responsibilities to the community, which is to recommend to council the adoption of the annual report, on which we also know we have an opinion that will be given and is included in your agenda packs. So it's great to be here, and I just would like to acknowledge that we have Derek Olsen, our audit director, here. Derek, I suspect probably for you and Stephen it would be well useful if you came to the table. I suspect you're going to be part of the process as well. And we also have Stephen Walker, who is the Executive Director of Audit New Zealand, and I'm deeply appreciative also that Stephen is here today as well. So folk, can I invite you to the front here? You might as well come up as part of the meeting as well. I'm deeply appreciative that our auditors here today, for it's an important day in terms of the annual report. So look, firstly, any apologies? We look like we've got a full must. Leslie.
Thanks, Mr. Chair. I need to apologise for an early departure. I have a pre-arranged legal case that I need to attend.
What time do you need to be away, Leslie?
10:15.
I would hope that we finished before then.
Yes,
That's the chair's kiss of death to a meeting, but I would hope that would be the case as well, Leslie. But let's take a precautionary motion that we acknowledge the early departure of Leslie. Is there any other apologies? Yes, Tom.
No,
thank you. Do I have a seconder? Thank you, Darren. I'll put the motion. All those in favour, please say aye.
Aye.
Those against, it's carried. Look, I make an assumption, but is there any matters of your personal interest that should be raised at this stage for the matter that's in front of us? I presume there is none. That puts us straight into the only agenda item on the paper, which is item 3, which is the annual report adoption. So the way I'd like to do this is I'd like to invite Patricia, and look, it would be remiss of me not to do it at least twice in the meeting. So this is the first time, Patricia, is to say thank you that you've got us here. As we will discuss, I suspect it's been a reasonable challenge to get here, and Patricia has shouldered the effort, and I just want to make certain that before we get too far in the meeting that I acknowledge that, Patricia, so thank you. So I'd like Patricia to talk to her paper and lead us through what are the key decisions. I'd like to then invite Derek as our audit director to talk to us also about the paper, and then I will open it up for questions and comments by the committee, and then we can move to the motion. So Patricia, thank you, in your hands.
Thank you, Mr. Chair. So today is this committee is we're proposing a set of recommendations to go through to council this afternoon to adopt the annual report. We also want to adopt the draft summary annual report. Audit New Zealand are still working on the audit of that, but to make it as quick as possible, give delegation to the chair of this committee as well as the acting GMs, Finance and Assurance, and the Chief Executive to sign that off once it's complete. Legislatively, we have to have the summary out within 20 days of the annual report being adopted, so that just speeds the process up. You also have within the agenda both the draft audit opinion from Derek, and I'll let him speak to that, as well as the letter of representation which we are required to sign to give to Audit New Zealand, which says that we've provided all the information that they have asked for, but it does make 2 specific comments which I'll come to later. So if I look at the key issues for this annual report, as Bruce has said, it's been a long time coming. We are nearly 9 months into the next financial year. The key issues that we had was the revaluation of our assets, being our infrastructure assets as well as our operational land and building, and this resulted in a $215 million increase in the value of those assets as a result of the revaluation. All those revaluations, with the exception of roading and library books, were undertaken by independent valuers. In relation to roading, we used our own staff valued our roads, bridges and footpaths, and then we had that peer reviewed by an independent valuer. So you've got some assurance that those numbers, as large as they are, do have some independent basis. Library books, we don't, it's immaterial compared to our other assets to get that peer reviewed. That increase is similar to what we've been seeing around the country, with the increase in the construction price indexes, but also the cost of that some are seeing in the replacement of assets. It is their policy to actually revalue every 3 years. So as many of you will recall, last year we ended up with a qualification on our asset values because we chose not to revalue early. We didn't believe that at 30 June we had the indices were indicating a significant increase in the value. So we chose not to do it, and we kept our revaluation cycle at 3 years. So this is not an unusual increase to see. Other than that, we still had, as we have reported many times to the council, we did have an operating surplus of 6.6 million, and that's an increase of 2.2 million on the previous year. The group after tax was on par, had a 5.1 million surplus, which was on par with last year. And we now have, council has total assets of $1.3 billion. Predominantly those are sitting in our infrastructure assets, but it's a large number. And their borrowings, as I've said many times, is 102.1 million at 30 June. And that's the equivalent of $3,803 per property within the city boundary. And that has actually increased from last year as we start taking on more debt for our capital program. In terms of our level of service achievement, council achieved 64% of the measures. Now these measures are slightly different to what was seen in the 21 annual report because this is the first year of the LTP that we're reporting on. And that's probably where I'll leave it. The biggest issues, there are some, the two issues in regards to the letter of representation that I want to draw your attention to is in regards to a couple of technical points that we had to do in relation to ICL. And that is considering whether the loan which council has with ICL was impaired at 30 June and whether we needed to take a credit impairment. Our conclusion was that we didn't. And the other is in relation to the consolidated group and how ICL as an associate of ICHL gets fed through. And we have a divergence in accounting treatment between those two because ICHL prepares its financial statements as on a full profit accounting standard basis, councils in a public sector basis, and there's a divergence about how we can treat those assets, which has resulted in a slightly different outcome, but not a materially different outcome. So we have no impairment of the associate at the council level. It's technical, but it is, if someone was looking at it, would spot it. I'll ask Derek if you want to go through the opinion. Yeah.
Thank you, Derek. In your hands.
Thank you, Chair. Thank you, Patricia. As Patricia has indicated, we intend to issue an accept for audit opinion that will be included in the annual report for adoption today. Also, as she has indicated, our qualification relates to the comparatives, whereby we issued a qualified opinion in last year's audit report that relates to the property, plant and equipment valuation, and the qualification this year relates to that comparative figure as well as the movement in the current year due to the scope limitation on the closing balance of the prior year. Also to note, without modifying our opinion further, we have also included an emphasis of matter paragraph relating to the 3 water reforms that's currently happening within the environment. Also to note some other significant matters and issues and risks that we dealt with during the audit. As Patricia has already highlighted, one of the key risks and significant risks for us was the valuation process undertook this year, whereby council revalued its infrastructure assets, mainly roading and 3 waters. And as she said, there was an uplift of 250 million with regards to your infrastructure assets, which is quite substantial. And this was driven mainly by the uplift in housing prices and land prices over the past 2 years, as well as the New Zealand construction cost inflation that resulted from macroeconomic challenges, including supply chain challenges and global market disruptions. We looked at all the independent valuations that were performed, as well as peer reviews, and we were satisfied with the underlying data and the reasonableness of assumptions underlying the valuation methodology. We also gained reasonable assurance that the valuations complied with the appropriate accounting standards and valuation standards. We also obtained representations from the respective valuers, as internal as well as external, regarding the suitability for inclusion of these values in the annual report. Council also carries some of the assets at cost, and we assessed these for impairment, but no impairment were reflected on those assets carried at cost. Another area, significant risk that we identified for this year's audit as per our audit plan was around investment property. Again, you carry around 26 million worth of investment properties on your balance sheet. And again, assessing the investment properties, we were satisfied that it was carried at appropriate values within the annual report, but we have made some minor recommendations to council with regards to the asset register containing your investment property. Also, as always, we do look at management override of internal controls and classify this as a significant risk in all our audits, as management is in a precarious position whereby they can override controls that can lead to fraud and resulting in misstatement of the financial statements. Again, through our audit procedures, effectively looking at journals and any unusual transactions, we were satisfied that nothing came to our attention that led us to believe that there is any management override of internal controls. Also, maybe 2 other issues to note. We did identify a material prior period error this year. Again, this relates to Invercargill City Property Limited, whereby the loan had to be restated. Now again, without getting into the technical jargon, we just determined that the loan had to be reclassified from being carried at amortized cost rather than being carried at fair value through profit and loss. And this is based on the conditions and terms of the loan, whereby in terms of the accounting standards, you need to do certain tests. We call it the SPPI test, the solely payments for principal and interest test. And we deemed that because of the arrangement within the loan does not meet the criteria as per this test, it had to be reclassified. And that then resulted in a prior period error misstatement, and that was corrected this year as well. Again, as Patricia mentioned, the 2 items that's also included in our representation letter, I just want to highlight that as well. So that relates to the Invercargill Central Limited share valuation. And as she reflected, at a council level, the transaction is unwound, meaning that you can reflect the value of that investment at its value as per the independent valuation performed. But then at an ICHL level, that was impaired based on the valuation that we received from an independent valuer. We also needed to get our own expert looking at that valuation, seeing that it was impaired, and just needing to again assess the assumptions and reasonableness of the valuation, and effectively concluding that the investment in ICHL, seeing that it's on a for-profit accounting standards, needed to be impaired. Relating to that as well is the possible impairment of the loan, whereby whereby council advanced 12.8 million to ICL, and again through our audit testing and engaging with technical, we deemed that the loan is carried at fair value, but going forward, council might need to reconsider and ensure that the credit rating of the loan is appropriate. I think with that, Chair, that's all the issues that I want to highlight from our audit. Thank you.
Thank you, Derek, and I appreciate your comments and yours, Patricia. So, members, our responsibility is to do a final review of the accounts, to consider the letter of representation, and then, as you can see, there are a suite of recommendations, which essentially is at this stage, and I hope it stays that way, a positive recommendation to council that you adopt the annual report, you receive the audit opinion, and the appropriate representations are signed by the Mayor and the Chief Executive, and that'll conclude the key part to our accountability requirements for the 21-22 financial year. Just a couple of very brief comments from me. What is the value of this information? And I'm going to put one qualitative statement here. This information is late. We knew it was late. It should have been done before Christmas. We covered that at our last risk committee, and I want to acknowledge Stephen's presence here because, as I indicated to you, our immediate need is to get the annual report adopted, to do the work. But there needed to be an accounting and an accountability for audit performance. So I'm grateful that both Derek and Stephen are here because we planned at the conclusion of this meeting to start that accounting and accountability for what we view as audit performance, which has been expressed roundly as a concern for this committee and the service received by ICC. The value of having an audit is important. While it can be difficult and sometimes the annual report appears impenetrable, I want to reflect a couple of things. One, having an external opinion on these financial statements help us have confidence we understand how our financial strategy, not anybody else's, how our financial strategy has worked out in the course of the year. The second thing, and clearly it's been a key focus for both Derek and Patricia as the accounts have been prepared, it gives us a sight on our future costs and the financial strategy you must be considering in your annual report. And that clearly is the impact of being a substantial asset owner and the challenges that we will have, as does the entire territorial local authority sector, indeed probably actually the regional sector as well, in maintaining its asset base and levels of service. So while it might appear a very quick and hopefully it's a quick process this morning, that this is a significant piece of work by us in terms of recommending to your colleagues this afternoon that we see the audit through to its conclusion. So do I have comments or questions, probably first of Derek and Patricia, and then we have some comments. Thank you, Tom.
Thank you. I don't have a financial background, but I've chaired a number of companies in the private sector, and I've got a, instinctive abhorrence of qualified opinions, right? And maybe I read more into them than I should. as I read this, I really struggle to understand why this opinion is qualified when the last full external valuation that was done presumably was audited back, it was 2019, the last one, and this one has been fully audited in 2022, and there is a gap between them which you presumably have audited and recognise, and yet the qualified opinion is a consequence of the fact that we decided that we would not do a full valuation in 2021, which was actually not required of us. So could you maybe just explain a little bit your thinking behind deciding to make it a qualified opinion? Maybe I read more into that than I should, but I really don't like qualified opinions. So can you just explain why you felt it necessary to do that?
Yes, thank you, Councillor, through your chair. We did qualify last year's accounts because the accounting standards require council on an annual basis to determine whether there's a material movement between the carrying value of its assets and the fair value of its assets. So the value they're carrying in their books compared to what they would get in an open market if they had to sell it. When looking at the fair value assessment that was performed by council, there were indicators that did indicate that there will be a material movement, and if there is a material movement, the standards then require you to do a full valuation. Council opted not to do a full valuation, and as a result, due to the scope limitation placed on us not being able to determine an accurate value, we had to qualify and issue and express and accept for opinion on the value of property, plant and equipment for that financial year. Now for the current year, seeing that there's uncertainty around the actual value of that opening balance, the movement then this year to correct it, as we know the current year closing balance is fairly reflected through our audit procedures, but the movement in the current year is uncertain due to the uncertainty with regards to the opening balance. Hence, that qualification still being carried forward for this year. I think that makes sense. Thank you, Chair.
Thank you. Tom, I think it's fair to say, if I can reflect on the work of the committee, the opinion for the prior year was one that the committee did disagree with. But it's Derek's role and right to express his independent view. The committee has considered at the time that we had to adopt the annual report for 2021, we recognised that there would be an impact on this opinion in the way that Derek's outlined. So we were aware of that. While I would like to leave you in no uncertain terms, two things. One, we have also qualified opinion. Two, we disagreed with the opinion last year. It was a professional disagreement.
Sorry, Chair, I suppose my main surprise is the fact that it's automatically carried through to this year, rather than have been extinguished by the fact that there was a qualified opinion last year and a difference of opinion.
Yes, but as Derek has said, unfortunately, in the view of the auditor, it influences the opening balance that we have in our balance sheet, and also the movements through our profit and loss, our statement of income and expenditure for the course of the year. So it does have it. It does, I get the professional and, dare I say it, the technical reasons why, from an independent auditor perspective, as Derek has said, it will affect the opinion this year. Okay. So I've got Rangi, thank you.
Thanks, Chair. Look, my query or question is around the valuations, and obviously everyone's heard about this rise in the cost of construction, the cost of products and everything. But my understanding that it is a blip, and you get these every now and then, and it relates to obviously the very low interest rates spurred a housing market boom and things like that. Now, I'd imagine the value of our assets is deemed by not what we would sell it for, but what the cost of replacement would be. So, I mean, we have 30-year infrastructure plans, we have assets that only require replacing in 70 years' time. Now, how do we put a replacement value on an asset that is not going to be touched for such a long time, but we know it has to be done? And how do we work out an accentuated valuation on a spur of the moment sort of feeling for that asset when we know that those $500 million worth of assets aren't going to be replaced for 20 odd years, yet we're valuing them now at some accentuated value? It doesn't make any sense to me. Or how do you, and so how do these professional valuers actually ration it out that you could actually put that value on that product right now, or that asset right now?
So the valuations in the annual report, mainly on the infrastructure, are done on what we would call optimised depreciated replacement costs. So we look at, if we've got 100 kilometres of pipe of a certain diameter at a certain depth, how much it would cost to replace those today. Then we go, well, that pipe still has 70 years left in it. So we discount it back for how much has been used, and we keep doing that on a regular basis. However, if we go, actually, it's only got a couple of years left in it, it gets with a very low value. So we're looking at replacement cost but dropping it down. So we know how much it would cost us to replace today, which is the eye-watering sum, but actually as we replace them over their life, it doesn't really change the infrastructure plans as we would normally have them. It just gives us a snapshot each 3 years as into what the value is looking like.
So how do we mitigate this sort of one-off extreme construction blip?
As we continue to revalue that, if it is a one-off construction blip, and it may not actually return to below where it was before COVID, then we make sure that we've always got enough depreciation, and we make sure we've rated sufficiently for our renewals to be able to renew their assets when they need to be.
So we're never going to get to a stage where we have overvalued and we end up overrating, and when we get to the point of replacement, we find we have done that.
I would hope not.
I think Michael's got a comment.
Just through yourself, Chair, you want to separate the rating aspect in relation to the valuation. It does give you an indication of what you should be rating, and we've discussed that as part of annual plan process. That is the place where you can start to reflect in relation to that potential blip or life of an asset equation that you're talking about. So it's in the rating for the future asset expenditure that we need to consider as part of our annual planning process. But the valuation side is, as my GM down the end indicated, is about the point in time valuation, and that's what's reflected in the accounts, and it gives you an indication of what you should be putting aside for and rating for on a long-term basis to replace those assets in the longer term. We will discuss it as part of our annual plan process and in line with our financial strategy.
Oh, that's cool. Yeah.
Thank you. Are there any other questions or comments folk would like to make on the accounts? Right, can we move to the recommendations then, please? But I would like to take it quite slowly. Actually, sorry, there's one thing before we do that I would like to just focus on. We are making recommendations to Nobby as Mayor and to our Chief Executive, or in this case acting, dare I say, given we're in a slight interregnum, if I can be technical on that, Michael, that actually two things happen. They sign the statement of compliance in the annual report, and they sign the letter of representation. In effect, letter of representation is the auditor saying, well, if you want our opinion on your accounts, you own up to them first. It's a reasonably standard approach, and it's important that they actually receive that as the final point of, dare I say, evidence for their file to support their opinion. Put it the other way, no letter of rep, no opinion. Well, there will be an opinion, but it would be different. yes, sorry, Ryan.
Look, just a point of clarity around these letters of representation. If you go to page 6 in your board books, it's headed audit representation letters, and in the second paragraph, it says these audit representation letter. So it's using a plural, then it's using a singular. So are we talking multiple letters or singular?
So there will be a further letter of representation which you haven't received yet on the summary annual report. That might just be a typo from me.
In my English, it doesn't quite read right.
It's a typo. I was hoping we might have had the letter of representation for the summary. Might have been hopeful thinking for this meeting. So there
It's just one letter.
There is one letter. You do also have a back-to-back letter from basically initialing each of the representations so that you had that assurance.
No, that's cool.
So there are a couple of things with the letter, and I'm glad you've focused on it, Rangi, that I just want to draw your attention to. Essentially, we're saying we have disclosed and made available all information they need to have to be able to complete their inquiries. So it's important that we have that. That's why it's, by the way, valuable that with our information pack, essentially we have what is known as a back-to-back representation from Patricia as our lead CFO that actually they have made available, in their opinion, all the information. She is giving us some assurance that we can make a recommendation to both the Mayor and the Chief Executive that the letter be signed. We do have obligations, and I'm looking here particularly at the agenda pack on page 197 of 251, quite a series of reasonably important they're all important, by the way, but I'm just wanting to highlight 2 or 3, that we have disclosed all known actual and possible litigation claims. I want to reflect that from time to time, Michael, you have given us an update of where you believe all matters are at. We have received that as a committee, and it's important that it's not only that we report on what we know are our liabilities, but even also what are our potential contingent liabilities, and we have had that information at this committee to date. There is at the bottom of page 197 the important points that Derek has raised and is asking as specific representation from Council in relationship to Invercargill Central Limited, which reflects the key transactions, particularly between Council, ICHL and ICL, and the nature of that investment and the value of our loans and our investment. Again, both Patricia and Derek have raised those as matters that were part of the audit, and we are needing to, and reasonably so, affirm to the auditors that we believe the value of those loans and the investment are what we are representing in the annual report. I think the other thing that is important, I'm now on page 198, is that another area that is of concern to this committee is the absence of fraud or any other matter that would impact on the reliability of the financial statements. And so reasonably, again, we have been asked to assert that these accounts are not affected by fraud. Again, that's a matter which we have talked about at the committee, and there is no indication, and we should be, obviously, asserting to the auditor that that is the case. And also, the final point I think that there's 2 other points I'd like to raise. The second last one is that as far as we understand, we have complied with the law. There are no matters that we believe we are materially not complying with the law. As a public sector entity, that in itself is reasonable. And the final point which I wanted to raise is on page 199 of the letter of representation, which is that an important assertion which can only be formed today is that Invercargill City Council is a going concern, which is in light of all our understanding of now our financial performance and our position as shown by the balance sheet, we are in a position going 12 months forward that we can meet our obligations when they fall due. You've got that confidence from Patricia. Obviously, as a committee, we need to form that view, and I'm making a broad assumption that you have, I have, that we are a going concern, and quite rightly, again, we should be asserting that, along with all the representations to the auditor. I just wanted to point those out to you as we now go to the recommendations. Any comments or questions folk would like to make before I do that? Yes, Nobby?
Just a couple of things. In relation to 198 that you referred to, no evidence of fraud. I guess it's naive for any big organisation to assume that there is no fraud. You do that at your peril. I guess for us as governors, we need to be assured that if we do detect fraud in the future, that we have not turned a blind eye to it, or that we have methods in place that would reasonably pick up what would normally be inappropriate behaviour. And so while we're asserting, and it's a position of not knowing what you don't know, it's still a reasonable position to take as well. The other comment I'd make was that you referred to Michael as an acting chief executive. That's not the case. I have a signed contract with him, and I've publicly announced, both internally and externally, that from the 26th of last month, that Claire has vacated her role, and so Michael is fully appointed.
Cracker, thank you. My apologies, Michael, for demoting you to acting. Thank you for the correction, Nobby.
Yeah, thank you.
No offence was intended.
No.
And I'm sure it's all relatively signed the right way. Thank you. Thank you for that, Nobby. Look, let's move to the recommendations, and I just want to take it through carefully because they are important, because it's what I want to stress. We are not making the decision sign, we are recommending to council, and that's a decision that you folk will need to talk about with your colleagues this afternoon. And by the way, Ross will be here physically. My plan is to be able to zoom in from the North Island. So we are recommending to council that we note as a committee that we've reviewed the draft annual report. We haven't focused on the draft summary for reasons that Patricia has outlined. That has got a bit of work to do, and there's a later delegation sought for that. And we recommend that they are both, recommend them both for adoption. We note that we have reviewed Audit New Zealand's opinion, the one that is published in obviously our agenda. And we have reviewed the letter of representation, which we've just done, and also that we've noted, and is included in your packs, the back-to-back letter from Patricia in Effect Management, enabling us to have confidence to sign that letter. That's number one. Number two is also noting one that the draft Audit New Zealand opinion has a limited scope in relation to the 2021 comparative numbers, so it's important we note that. And Tom, thank you for your questions. That's got us to that point. And we note that impact in terms of the opinion. So we are recommending to council at 3 that they adopt the 21-22 annual report, which you have had a chance to review in attachment 1. We are authorising, or we are recommending council authorises, so I should be careful how I say that, the Mayor and the Chief Executive, not the acting one, well done Michael, the Chief Executive to sign the letter of representation. And we are recommending to council they authorise the Mayor and the Chief Executive to sign the Statement of Compliance, which is effectively the annual report. We are recommending that Patricia have the ability to make any minor changes. Hopefully with its publication we don't find too many spelling mistakes, but that's essentially what we are allowing for there. We're also trying to be efficient with 7 to pursue the summary, which is yet to be fully completed in the brief way that has been explained. And I am effectively asking to enable me as chair of the Risk Committee, along with Michael and Patricia, to release that for signing subject to the receipt of an audit opinion from Audit New Zealand, and that we authorise the Mayor, the Chief Executive and Patricia to sign the compliance statement. And indeed the rec that needs to be given in association to that. There's the multiple one rangi, and again, if there are changes of a minor nature, that Patricia is enabled to make those. So it's an important substantive decision by this committee to make those recommendations to council for this afternoon's business. Do I have a mover and a seconder? Thank you, Ross. Thank you, Leslie. Is there any discussion on those motions? Yes, Nobby.
So I've got a couple of obligations under 7B and 7C to sign as well, and I'll be upfront about that, subject to the meeting that you hold after this meeting with the Audit New Zealand people, and prior to the full council meeting. I will not discharge those issues until the issue of the performance of Audit New Zealand is resolved. So I just want to be upfront about that. Some of my colleagues already know I'm going to take that position. It seems to me it's the only tool that's available to me at the moment.
Thank you, Nobby. You made me aware yesterday at 2 o'clock you were of the view or of the mind not to sign.
Yep.
And I would certainly appreciate the chance to talk with you after the meeting.
Yep.
I have written you a note with a strong recommendation as chair of this committee, and I think, Ross, I can say you support me in this, that we would urge you not to follow that strategy. We believe that there is importance in seeing through this immediate accountability, while indeed we have deep, and I can assure you, meaningful discussions with both Stephen and with Derek over the performance of Audit New Zealand. So thank you for that indication, Nobby.
I get that message.
Go through the course of the day. Are there any other comments on the motion people would like to make? There being none, thank you, Ross. You've moved. Leslie, I've got you as the seconder. I'll put those motions. All those in favour, please say aye.
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 Those against? It's carried. Thank you for that. If I've got it correct, we are at the end of our business, Michael. I appreciate that you've got a long day, and Derek and Stephen, thank you for being here. Obviously, we have intended, and we will have some discussions as we go on. I said I needed to do it twice, but again, as chair of the committee, Patricia, thank you to you and indeed your team for getting us to this point. I will reflect that some of the accounting matters, and are substantial and are significant, and reflect the nature of the investments and transactions the council has got into. I have observed that Patricia has engaged on those technical issues in a way that is both professional, timely, and ultimately very helpful to us as a group of governors responsible for this community. So Patricia, particularly to you, but indeed definitely to your whole team, again, can I as chair express my thanks. And I hope in some way that might even be in the minutes, Malavika, if we can do it that way. With that, thank you. It's a long day. Can I declare the meeting closed? Thank you for being here this morning.